Yeah. Hey, thanks, guys. I got the numbers here for you live. KG adjusted EPS for the third quarter ahead of estimates by a pretty wide margin, 21 cents, well above the 17 cents expected. Third quarter revenue also ahead of the expectations at $1.18 billion versus the just shy of $1.1 billion that was expected. Adjusted EBITDA for the quarter, $606.5 million, way ahead of the $502.1 that was expected. They provide a ton of guidance here in which they boost their revenue outlook for the full fiscal year. They bring it up to $4.4 billion to $4.4 billion, previously having seen $4.14 to $4.15. They also provide current quarter guidance for revenue at $1.33 billion. The street had an estimate shy of 1.2. U.S. commercial revenue surges up 121% year over year to just shy of $400 million at $397 million. Operating profit for the full year is now seen at $2.15 billion to $2.16, previously having been estimated at $1.93 billion. These are another monster quarter. But Kevin, I'm watching that dreaded U-turn happen here. Are we just looking perhaps at a stock that's near fully priced?
I mean, it's still up, $7 since the announcement. So this stock moved up around, 3% today going into the print. So obviously priced a little bit rich. But when you're looking at the numbers, they did beat the street's expectations. Artificial intelligence and the demand for the AIP platform continues to rise at a very aggressive rate. Commercial business continues to outpace the growth that you are seeing from the government side. And that's actually a really good sign because as we go over time, we should be relying more on the commercial side of their business rather than government revenue, because spending obviously could get delayed and get readjusted here. It looks like they closed a record-setting $2.7 billion worth of total contract volume of value for the quarter as well. That's up 151% on a year-over-year basis. This looks like a really decent report. This is a stock as well. We have seen very aggressive reactions to the upside, even to the downside before here, Alex. Market makers are also kind of prepared for this. You are seeing it in the premiums as well. You did see a pretty decent balance when it came to the amount of calls being purchased today and the activity and the amount of puts. For the most part, it was close to being 1-to-1. So there isn't really this gamma squeeze effect that we probably will see in the stock unless they did provide something that was a complete outlier. And it seems like the market makers for now kind of have this one tightened up. But this is actually a really good report if you're looking at the fundamentals, and this probably will have some complementary effects for other businesses within this space as well.
Yeah, I'm just looking here, guys, at some of the breakdown in the results as we talked about. It seems like the standout number, to me at least, guys, is the U.S. commercial revenue growing 121%, and then they still see that revenue for the full year over $1.43 billion. But Sam, what do you make of the price reaction so far? We made a lot throughout the day about how it is a stock that has moved a lot in the past, but it wasn't necessarily priced that way based off its own standards in the options market. And it looks like the option market might have had it right.
Yeah, it does very much seem that way. I mean, up over 3% right now. And I mean, this hit an all-time high, as we mentioned, in anticipation for these earnings. Obviously, this is viewed as an expensive stock. I mean, we've heard the argument about the valuation. Certainly, some analysts are calling it the one, or at least the valuation you sort of love to hate at the moment. But yes, I think the standout number was very much as far as the commercial revenue is concerned, 121%, which, as KG pointed out, needs to very much outperform as far as versus the U.S. government contracts, which came in at 52% as far as that revenue. And that is because an analyst had pointed out today that very much what is key is what they can do with some of the hyperscalers. And that's going to be very much important now for the next leg of this trade for this company, which is certainly interesting because we've obviously just heard about the NVIDIA partnership for one. But it's going to be very interesting, even though we have seen the government spending very much companies like this becoming beneficiaries of that, and we've seen it across the other earnings reports as well. There has been a question as to if we see any sort of degree of pullback on that front, will the commercial side be enough to make up for that? So I think that's a really encouraging metric to actually keep tabs on. What's going to be really interesting, and I wanted to sort of get your thoughts as well on this, is whether this sort of government shutdown is going to affect some of the pipeline of some of those contracts. I mean, no doubt. Some of the focus is also going to be on international as well. I'm not sure if some of the commentary is coming up regarding that, particularly with regards to some of the NATO countries that it's been partnering up with as well. Obviously, we're hearing about Poland, obviously with Israel as well. So I think, the next focal point is going to be that earnings call and, getting some of the answers to some of those questions, particularly on the government shutdown, I suppose, if that's holding anything up with regards to, as I mentioned, the pipeline.
Yeah, the call's slated for 5 p.m. Eastern. That'll make headlines as well. Rule of 40, they've been touting this, KG, 114%. I mean, we're in the stratosphere. What else sticks out to you? Final thoughts.
I was just actually looking at that commentary as well. Look, this is a good report, both top, bottom line. I think there is a concern, and Sam brings up a really good point, not so much about the demand when it comes to European countries, but maybe they actually do see a stalling when it comes to onboarding contracts. We probably will see that offset here in the United States, but there is some chatter from analysts that maybe the European countries could actually slow roll maybe some of their onboarding here in the future. Not sure how much of a big deal that is. And then last but not least, there are some traders that are looking for a potential stock split announcement to be made. Now, maybe that's probably why we saw this run up a little bit. Usually companies don't announce stock splits when they announce their earnings. Usually it's about a week or 2 weeks after, but maybe that's something that they get asked about on the conference call, and does that actually kind of fuel maybe some of the retail buying of this name over the next couple of weeks? We'll see.
I'm excited to see. Back to unchanged, guys. Thanks to Kevin Green, senior markets correspondent for the Schwab Network.